Hey guys, welcome to the video, the ultimate ETF guide, Invest Like a Pro. In this video, I'm going to cover 10 different types of ETFs that you can invest in as an investor. And shout out to a community member who is also a subscriber to the channel. Appreciate the suggestion, Randall. So without further ado, let's get into the video. So like I said, this is the ultimate ETF guide, Invest Like a Pro. This is what we're going to be covering today. We're going to talk about a brief overview of the 10 ETF types that you can buy and their tickers. I have a nice spreadsheet built up for you guys, so you guys can take a look at that. And I'm also going to show you how you can kind of research different ETFs just in case something might pique your interest. But my next point, considerations before you buy. We're going to go over that. Don't just go out and buy these ETFs just because I mentioned them on the channel. That would not be a very smart move, all right? And then at the very end, I'm going to give you some very important next steps. So a quick disclaimer, as you guys know, I'm not a financial planner, financial advisor, certified public accountant, or any of that type of stuff. I am just some dude on YouTube sharing his experience and his knowledge. All right, so here's a brief overview of the 10 ETF types that you can buy and their tickers. So real quick, before we get started, I know I keep saying that, but before we get started, just please, this is a very lengthy video. Make sure you have a cup of coffee, your water right next to you. Make sure you're taking down some notes, all right? Pause the video if you have to go back and look, but let's get into it. So the very first one is equity ETFs. There's broad market ETFs, there's sector and industry ETFs, and international ETFs. So real quick, broad market ETFs are things like a total stock market index, something like Vanguard's total stock market index, ticker VTI. There's also the S&P 500 index, ticker VOO, right? These are very broad market ETFs. And just for your own information, a lot of these terms are interchangeable, so you'll see some of these ETFs pop up in later slides. But we also have sector and industry ETFs, something like the XLK or the QQQ, which tracks the NASDAQ 100, right? Which is, index of technology stocks. You also have semiconductor ETFs under like sector and industry, right? It's a very specific sector. Within the market, you have several sectors. You have healthcare, finance services, information technology, consumer staples, discretionary. You have, what else do you have in there? Healthcare, if I didn't already mention that. But yeah, you have different sectors, different industries within the market. All right. You also have international ETFs. These are ETFs that invest in companies outside of the United States. Think like Canada, maybe China, maybe Asia, maybe India, maybe Europe, maybe down south in Central America or South America. But these are ETFs that are specifically investing in companies in emerging markets or established markets outside of the United States. All right, number two, bond ETFs. All right, so we have a couple different bond ETFs. Basically what a bond is, when you buy a bond, it is a promise by the entity to pay you back interest on whatever you put your money into, right? So it's kind of like a savings account at a high level, but let's break it down real quick. So if you go out and buy a bond, right, for $10,000, and on the bond, the contract is that if you hold it for 1 year, or 2 years or 3 years, that they're going to pay you interest on that money. And that interest could be, 5%, it could be 6%, 7%, right? So on $10,000, you're going to be making, $600 a year or $500 a year, right? In interest payments, all right? And they'll pay you out either monthly or quarterly. So the thing to know about bonds, there is some tax considerations you should know, but again, I'll get into that much later. But here we go. We have government bonds, we have corporate bonds, issued out by companies, and we have municipal bonds issued out by city and state. And then you have a total bond market index, ticker BND. And this total bond market index basically just has everything, right? You don't have to think about it. It is kind of nice to have. And there's also treasuries in there. I didn't add that, but there is treasuries that you can buy. All right, so there's commodity ETFs, something like gold or silver, right? Ticker GLD or ticker SLV. And these are ETFs that give you exposure to precious metals like gold and silver. Do you actually own the gold and silver? No, this is known as what is known as paper, gold and paper silver, right? It gives your portfolio exposure to that. There's oil ETFs or energy, right? You can invest in energy. There's agriculture, things for like food, farming, things that we need to eat, right? Another popular ETF is the real estate ETFs, right? So you have something called REIT, which is a real estate investment trust. It's something that I like to invest into, but basically these are, real estate companies that purchase income producing assets like real estate, apartments, cell towers, triple net lease buildings, farmland, storage facilities, things like that, right? And they pay you a dividend, for being an investor. But basically, we have a couple tickers here: VNQ, XLRE, and PSR. All right, so these are real estate ETFs. They invest in real estate companies, which are known as equity REITs. But there's also something else there, in case you didn't know, and that is what's known as MREITs, mortgage REITs. These are companies that provide loans to real estate investment trusts, or to home buyers, or to commercial developers, commercial investors, whatever, and they provide these loans to them, or large institutions. They provide these loans to them, and they make money off the interest, right? So those are known as MREITs. And there's also a third category called hybrid REITs, and it's usually a combination of MREITs and equity REITs. So another type of ETF that you can also look at is what's known as dividend income ETFs. And I do have a video on dividend income ETFs. I believe as of making of this video, the dividend income video will be published earlier than this video. But anyways, we have dividend income ETFs, something like SCHD or VYM, and these are ETFs that invest in dividend paying companies, and they have a special selection process or certain criteria that these companies have to meet, track records of, probably decades of dividend growth and dividend payouts and never missing dividends, and also trying to include some of that growth in there. These are growing companies, share appreciation with dividend payouts. Okay, so that is what a dividend ETF is. There's different types of dividend ETFs, and they all have their different objectives, but basically what it is that they're going to provide you as the investor income in the form of dividends, either monthly or quarterly. All right, so moving on, we have number 6, inverse and leveraged ETFs. Now, I won't sit here and lie to you. I've never invested in these. I know what they are, but I've never actually put my money into them. They seem a little more riskier than what I like. And also they're employing strategies I don't fully understand. So I typically stayed away from them. I have seen them, but I've never invested in them or actually seriously looked at them. Though they do have some mouth-watering yields and mouth-watering returns, I still just have never invested in them. But you have inverse ETFs, which are basically, ETFs that are shorting something. They're going to be shorting like an index, like the S&P 500. So you can look at this ticker SH. There's leveraged ETFs, ticker SSO. And the leveraged ETF, what it is basically the fund manager is going to take out more margin, borrow more money for more return, right? So it's a leveraged ETF. They're using, they're using leverage to purchase their shares for better returns. But, again, if something goes awry, that also amplifies losses. So again, just something to think about. You have thematic ETFs, and thematic ETFs are basically, they follow like a theme, like a story. So you have like clean energy ETFs, ticker ICLN. You have disruptive and innovation technology ETFs, something like ARK-K or ARK-G. And, these were very popular in 2020 and 2021. But yeah, they basically, the ARK company, who's headed by Cathie Woods, she basically creates all these thematic ETFs that are going to be doing like AI, genomics, innovation or disruptive innovation, semiconductor, all types of different themes. All right, so that's basically what a thematic ETF is. You have something like ESG too. I don't know if you know what ESG is. I barely fully understand it, but yeah, there's ESG ETFs out there if you want to be kind of a activist investor. There's biotechnology ETFs as well, ticker IBB. So number 8, smart beta ETFs. you have something like value ETFs, ticker VLU. And these value ETFs, the objective is to find undervalued companies based on certain criteria or metrics and then purchase them, right? And then kind of hold them for the long term and then let the thesis, the idea, the prediction play out. And hopefully this company will, the share through share price appreciation, that the share will increase. You also have size ETFs. So you'll hear out there in investor land or finance tube or finance land, whatever, that there's small cap, mid cap, and large cap. Now, cap means capitalization, right? It's a market capitalization. Each company has a market cap. And I can show you that here in a second, what that looks like. But basically, you have companies that are very small cap, and these are, companies that are kind of relatively new. They're not like the Amazons of the world or anything like that. These are small companies, probably relatively new, maybe a couple years under their belt, and they're being traded on the stock market. All right, they're particularly higher risk. With small cap, you're going to have something called turnover, where companies will get traded out because they're either falling out of the index or falling off the ETF, and then replaced with new companies. So typically a turnover rate is pretty high with these. You have mid cap, which is kind of in the sweet spot of large cap and small cap. But the mid cap, you have something like it's called the Russell 2000, and it's basically an index of 2,000 companies that meet that mid cap criteria. And then you have large cap. We all know this one, the S&P 500 index, which is a large cap. You also have, I guess the broad market one would probably be, something like VTI would just be the broad market. So it's going to include all three of these. But yeah, you have large cap, which specifically invests in large cap companies, and VOO or the S&P 500 isn't the only one that does it or that, follows it. There's other large cap ETFs out there, and they might have their own flavor or their own criteria for choosing the large cap and then weighting them differently. Then you have currency ETFs. You have single currency ETFs, something like this ETF's investing in the euro. And so basically, I assume it's betting against the US dollar, but it's a good way to hedge your money. If you're investing in USD, it's a good way to hedge your money. But ticker FXE. And then we have basket currency ETFs. Basically, what this ETF does is it goes out and buys a bunch of currencies from different parts of the world. And it's basically helping you hedge your bet against, the US dollar. So not a terrible strategy, but something I also have never touched or actually looked into, it's just never been my thing as an investor. All right, this one's actually relatively new compared to most of the other ones. And these are crypto ETFs. So as you know, cryptocurrency is a digital asset. Bitcoin's the most popular one out there. But there's Bitcoin ETFs, and there's several of them. I just cherry picked this one, but this is HODL, HODL, hold on for dear life. And this is, a ETF that invests specifically in Bitcoin. I think futures contracts, if I'm not mistaken. So let's go over the spreadsheet. So I built out a spreadsheet for you guys. I'll include a link down below in the description for this spreadsheet specifically. There may be some tickers that are mentioned in the slides, but not mentioned on here. But, you can go and kind of take a look at them and see, just kind of wrap your mind around them. All right. I'm not saying you should go out and start investing in these things, but what you should do is just start reading about them. And I'm going to show you exactly how here in a second. So you have two options, right? Use a spreadsheet, read the description, and then go to the website. That's one way you could do this. The second way is you can go use Seeking Alpha. And Seeking Alpha is free to use. I personally have a pro account, professional account, whatever it is, because I like reading other people's thoughts on companies and articles about different things. So I like to just, kind of be in the know. But here's one thing. And it also gives you some additional information for each holding or for, ETFs or stocks. But let's take VTI real quick, which is, the Vanguard Total Stock Market Index. Or Total Stock Market Fund. Excuse me. I gotta get my language right here. All right, so we have VTI. This is what it's going to show you. And sorry if my screen's kind of in the way down in the corner. But this is what it's going to show you. It's going to show you a dividend rate, expense ratio, your yield, and assets under management. And here's a couple articles that you can read about it, about what other analysts or other researchers or other stock pickers are talking about it. And then if you go down to a little down to the middle, you're going to see the fund profile, and this will give you kind of a bigger idea of what it's actually trying to do and accomplish, right? And here it gives you kind of the holdings breakdown. What is it investing in? So you remember those markets I was talking about earlier? You have technology, financials, healthcare, consumer cyclical, industrials, communication, energy, real estate, utilities, and basic material and consumer defensive, right? You have all these different sectors in the market, right? And then you have the top 10 holdings. So we know that VTI, its biggest holding right now is Microsoft Corporation. Then in second place is Apple, Nvidia, Amazon. Whoops, didn't mean to click that. So we know its top 10 holdings is Microsoft Corporation, Apple Inc., Nvidia Corp., Amazon and Meta, et cetera, down the line, right? And it has 3,708 companies in that ETF. And this is why, again, I talk about why ETFs are so powerful for diversification, because when you buy one ETF, you get diversified across 3,700 different companies. I mean, it's, if one of them goes bankrupt and fails, it's not going to take your whole portfolio down, right? And you get some, dividend information here. And you remember what I said about the turnover rate? Let's see if we could find it real fast. All right, turnover rate down here under risk. So turnover is 2%. And turnover is basically they're cycling out companies, right, and replacing them, but they're doing that within the ETF. And when they do that, they either trigger a capital gain or a capital loss. And guess who gets to pick up that bill, right? That's you as the investor. So you typically want to look for turnover rates that are very low, not high at all right? So that's basically that. Let's go back to the presentation here. So here's some considerations before you buy anything, all right? Anything. And we're going to go back to my spreadsheet. So I listed expense ratios because that is one of the biggest things that's not really looked at by investors, right? They're looking at the mouth-watering returns, and past performance is not indicative of future returns, but they're looking at the past performance, they're looking at the dividend yield, and they're like, oh my God, this is so, yes, this is what I want, right? But the expense ratio is a huge deal because, as I mentioned, it could be the difference between $10,000 in fees paid over the lifetime of the fund that you've owned it, let's say 20, 30 years, it could be $10,000 or it could be $100,000, right, over the life of the fund. And that will substantially drop your return, towards the end. So again, you always want to be aware of the expense ratio. You don't want to just be buying ETFs just to buy them because, their returns look so great. Another thing you want to consider is the tax considerations when buying these ETFs. And again, I know it's very mouthwatering to see that, oh, this is offering this kind of return, this kind of yield, etc. But you want to also keep in mind the tax consideration or the tax impact it could have on you, because each of these different ETFs have probably different tax considerations, right? Like REITs, if you're going to be investing in REITs, the dividend income is considered ordinary income, right? If you're investing in single companies or companies through the S&P 500, that dividend could be known as qualified dividend income, right? Which is subjected to different tax considerations. All right, the same thing for bonds. Bonds are taxed differently. Everything in these ETFs could be taxed differently. So you have to do a little more research. Absolutely, you should be talking to a financial planner or financial advisor, those people who are much smarter at this than myself, especially when it comes to taxes, all right? Here are some important next steps I want you to consider. Research before you buy. Don't go out and just start buying these ETFs because I put them in this video. That is not what a smart investor does. That's not what a prudent investor does. All right, research, read through it. Go on Seeking Alpha, look it over. Google some stuff, look on YouTube, all right? Research. Don't buy anything until you feel absolutely 100% comfortable that you know it inside and out. You know enough about it to make a decision. All right, that's my advice there. There is such a thing called over diversification. Build your portfolio that fits your needs and strategies. If you're going to just go out and select one ETF per type of ETF, just start selecting one of each, you can actually hurt yourself in the long term by doing that, right? Because if you're over diversifying yourself, you're actually going to hit what's known as diminishing returns. You know, if you just invested in the S&P 500 index, your returns could have been substantial. But if you're investing in all these other different ETFs and they all have varying returns and different profiles and different risk and different dividend return, your return could be worse, could be much worse, or it could be half, or it could be greater. You know, again, you got to be careful with that. All right. Don't just go out and start buying stuff because it sounds good. All right. So again, it has to fit your need and your strategies. If you're an income investor, I mean, I consider myself a cash flow income investor. I'm going to invest primarily in things that pay dividends. You know, I'm not going to go invest into clean energy because I don't care. I don't care about that. I don't care about clean energy. I don't know enough about it. I don't want to know enough about it. And it's probably more likely than not going to be a capital appreciation play, meaning that I'm going to play on the shares, you know, increasing in value. That doesn't mean that I don't care about clean energy. I just don't care about clean energy ETFs. All right. So just, you know, think about it that way. What are you actually interested in? What is your strategy and what are your needs? All right. If you're a long-term investor, like my next point, for a long-term investor, then maybe you're going to bank on, you know, share price appreciation versus income. All right. So be a long-term investor. If you go with any of these, all right, don't be trading them out every single day. These are not things that you buy and then you sell out, you know, a day later or sell out 2 days later. Anytime you buy pretty much any investment, you want to be thinking long-term. You want to be thinking 3, 6, a year, at minimum a year. You want to be thinking that long for the investment, all right? I like to think almost every 5 years. If I buy into an investment, I expect to hold it at least 5 years. Now, does that mean I have to hold it 5 years? No, that just means that, you know, the thesis for that particular investment, I want to hold it for 5 years. If something changes drastically, let's say the CEO gets fired, there's a massive scandal and, you know, the company is on the brink of bankruptcy, then yeah, I might pull my money out. You know, I'm not going to just stay in it just because my thesis is that, you know, but what I'm saying is you just want to be up to date. You just want to know that if you're going to be buying anything, you have a long-term outlook for it. All right. You're a long-term investor. That is my advice for this section. So if you guys like this type of stuff, I have a free community that I'm starting up. It's going to be a community of other investors, new investors, seasoned investors, and everyone in between. I have a investing masterclass site that I recorded. It's available on the platform. We're going to be having coaching calls once a week. Once we get to about 50 members, I might open it up a little sooner than that, but it really depends on you know, the interest. And I will put down a link in the description, in the show notes for you guys to access that if you're interested. So with that being said, I hope you guys enjoyed the video. I know it was a long video. Appreciate you guys sticking in there, and I will see you guys in the next video. Peace.